Okay, all you devils, we're going to take a look here at the dollar, and then we're going to look at some correlation between the dollar to gold, Bitcoin, and the S&P 500. So we're going to dig into that, but the focus will be on the US dollar index and how it's some of the things we might anticipate with the approaching volatility around the U.S. election. So we'll get to there in just a second here. Before we do it here, just a reminder, we've got this promo running for the Halloween season here. So we're running 31% off of monthly memberships for the educational membership. Now, it's very easy to take advantage of this. You simply would go to our site. When you're checking out, you would put in the coupon code BOO with an exclamation point. But just like that, all caps, BOO. Exclamation point. Gets you 31% off of the educational membership. I should mention this. That's as high as we'll ever go on discounts on the educational membership. We've gone 30% before, but we did 31 simply for Halloween being on the 31st. But if you've ever been interested in the educational membership and getting full access to everything that we do, as well as all of the upper belts, that's the best price you're going to see ever, right? We never go beyond 30%. So keep that in mind. That's a particularly attractive savings to have available to you right now. And then also here, it's 21% off of all of our indicators. And if you get over to our website and click on indicator, well, we've already had quite a few people take advantage of this, not only on individual indicators, but some of the templates where that 21% is pretty significant savings. So just not to harp on this all week long, but just so you know, that's as good as it gets for you. So if you're on the fence, that's something to consider. Of course, you can always join us for free and get started with a free account. That way you'll have access to the white belt and some of the things we make available in the crypto markets for you. But it's a limited access, but at least you'll get access to the white belt and get a feel for how we teach and style, etc., everything else that we do. All right, so just a reminder, don't let that one slip by if you've been on the fence, because that's as low as we ever go. All right, guys, there you go. Let's get over to the dollar. All right, all you devils, how's it going? Here we are, Tuesday the 27th. Here now, it's a little bit late for me to be posting here, particularly for members, but I've been working on this for a few hours here, trying to see if I can make some sense of some of the correlations that we're seeing in major asset classes, particularly with what I'm anticipating to be pretty substantial volatility going into the election. So what I thought we'd do here is we'd start with the dollar and look at how, for two reasons. One, what we might anticipate based on volatility. And secondly, well, I'll tell you, this is one of the most interesting, let me use the word interesting, charts for an Elliottian, because this is really a difficult account to get clarity on, because it can be interpreted a couple of different ways. So what I thought we'd do here is kind of see if we could do our best estimation on how these trends might play out with no real expectation other than an increase in volatility in what the markets typically do when faced with that kind of uncertainty. So this is a dollar on a 3-day. So I've got it here marked off the prior elections. Well, here, let me just scroll back a little bit. So here's November. If I move it, you can see it, right? So there's a big spike there, but if you pull this up on your chart. Okay, so this is the 2016 election, which surprised virtually everybody. And then the immediate reaction. So I remember this well as I was trading gold during this. So you had the initial sell-off when it first appeared like Clinton was going to get the win, and then the surprise, right, the jack-in-the-box surprise that we all got when Trump won here, and then the market immediately rallied. Now, you rallied into the end of the year, so this is January. And then through the first year and a half of his administration, we sell off, and now back up. Here's the COVID spike, and now we're heading back down again. All right, so okay, all fine and well, but we got to put it in context. So on the anticipation here that we're going to head into volatility, I'll say it that way. Again, I'm no bias from me at all, other than an expectation of volatility. Now, perhaps you could say that, well, if you're expecting volatility, there's an implied bias in that. Maybe. All right, but I'd put it at, personally, my personal opinion, we are at a 99.9% probability of a contested election. That's how strongly I'm convinced of this, and we'll be trading accordingly. But that said, right, and I talked about that in the S&P option trade that we set up. I think I posted that up on Sunday for members. Let's go back to the only other reference point that we've got, which is 2000 in Bush v. Gore, right? So we can go back here, open this up. So here's the space of time from election night to when the Supreme Court made the decision. And you can see, well, while there was that uncertainty, the delay between the election and the Supreme Court's decision, there was a slight push. Oh, well, shit, let's get in there. You can barely see it. So we're pushing higher. I mean, you know, it wasn't dramatic, but it wasn't insignificant. I know it's a little distorted to get perception here because it's such a big chart at 3 days. But let's do it this way. We went from, let's call it 100 up to 102, and then we got the decision, a little bit of a sell-off, and then it was straight up. Let's pull back here and get that off. Right. So that's the only thing that we have that we can compare to. So now, how would that relate to where we sit right now with an expectation for that volatility? So I'm really trying to slice this pretty tightly here with a target here, and we'll get to how I got that target. I mean, let's pull back out here a little bit and look at some of these trends. Now, one of the things that is really interesting here. So, well, let me pull these off now that I've made that reference. So if we look at this is a really challenging count because at first glance, your eye sees what appears to be just a perfect impulse. Well, if not perfect, at least clearly an impulse. So your eye wants to do this. There's 5 up there. I got A, B, C into a B. Now I'm dying to do this. 3, 4. Ideally, that had gone higher, and you would have had just a perfect impulse, right? Perfect. Well, we don't get it. And you're unable to finish that count because of the overlap here. So if we were to assume that this is a one wave, right, here, right, this eliminates that count. So the one count that we cannot have is 1, 2, 3, 4, 5. Can't have that. Even though that looks like, that has the, if you think about what Elliott would talk about having the right look, that has the right look, right? But that's a disqualifier. So now you have 2 decisions to make there if you're applying Elliott Wave. One is you could say, all right, well, it's futures market, some volatility around the pivot here. I'm going to allow it. I'm again not such a purist that I would tell you, well, that's an asinine thing, right? I mean, so, shit, look at it this way. If you thought that way, oh god damn it, come on, TradingView. If you thought that way, and you were a buyer here, because perhaps you said, well, look, Elliott Wave, I'll find it well in theory, but what do I see for sure? I've got a 50 from the pivot low, and here I would call these 2 dominant pivot lows. I got a 50, I got a reaction. I'm trading that long. Fuck the Elliott. I mean that's not terribly unreasonable, and just price action traders, right, who don't care about Elliott, might look at this and go, well, okay, so what are we doing? We're just coming back to test the structure, right? Prior resistance becomes the support. Did you have a nice trade there? Right, if you entered here, we'll call it 89, or even what do we got there? Let's call it, call it 90. All right, we got up to 104. And 14-point move, right? I mean, was that a decent trade? See, if you're an Elliottician, you're down here, you're going, well, I can't take that as the 4. All right, so maybe you don't take that trade. All right, Elliott's not perfect. Quit expecting it to be. Now, that said, that's a judgment call that every trader has to make. Now look at that. And again, I don't know if you're trading that or not, but just looking at the chart in terms of how you might interpret this. Well, this gets to be somewhat challenging. So let me go down to a daily from the 5. Now, this to my eye, this looks very hard to complete as a 3. Right, that looks like a 5 to me all day long. I mean, regardless of where you start the 1, 2, the 3, 4, 5. I mean, just eyeballing it here. Right, it's hard to argue with that. right? I'm assuming we could all agree that that's high probability. That's a 5, right? So how, unless you're doing a little Elliott shuffle, that you'd have to do that. Yeah, I mean, this is what you're going to have to do to try and get that into an ABC. So you're going to have to go A, B, C, right? So I mean, could that be it? Well, fuck yeah, of course it could be, right? So from an Elliott perspective, I mean, you're kind of stuck doing that, right? If you're going to trade that as the 4. Now, is that viable? Well, yeah. I mean, even that though looks a bit like a 5. Again, you got to get over trying to expect Elliott to be perfect at every pivot and every swing and every move. It's just it doesn't need to be. But the broader point here, if we're going to try and stick with Elliott rule set and guidelines, well, this is what you're stuck with here. Now, if we let's pull back out to that 3-day and say, well, how are we going to count this then? So if we're going to apply Elliott rule set, is there a count that would accommodate that 5 down and have us going up here? Now, one thing that's interesting here, I'm putting the 5 here. When we first looked at this, the idea that that's a 5 down, well, one possibility has immediately been eliminated because there is no, I shouldn't say it that way. It would be a gross abuse of Elliott's hardest rules, right, to accommodate this twice. And here would be the overlap of the 1, all right? But here, this could not be a 5 down as a 1 and this is a 2, because if I was going to compromise on either of these based on price action, well, I might forgive this, right? Because of the algo play, because that was a perfect algo play. Granted, it didn't get the target, but you did get 6 DX points out of that. This, though, as a 1-2, I mean, I've never taken a trade on the assumption that an overlap here, we're going to allow for the 2 to overlap, right? That's one that, even me, not as a purist, I wouldn't allow for that. Now, it looks small here, but this is a 3-day chart, right? That's bigger than you think. That's enough, right? So to eliminate that as a candidate, even though that's COVID volatility, even though that's still, that's one you can't compromise on. You can't go 1-2. Right, so process of elimination, all of a sudden this count starts to get very tricky because this sure looks like it's 4-ish, right? So you're dying to finish that there, and then you look here and you go, hey, that sure looks like there's an impulse in here. Whether you went, you might have to go 1, 2, 3, 4, 5, right? You're dying to do that. Right, so then that would be consistent with your thinking being that, oh, hey, I got a 1, I got a very clear 3 down into a B. There's my completed impulse. Oh shit, man, I'm golden. I know right what the market's going to do. We're going to come down here. We're not going to overlap that 1. We're going up for the 5. Right? That's what you'd be thinking there, and that's assuming you wedged in the ABC here. You're going to accommodate this here and this here? I think not. So let's see if there's a count that would allow this to play to accommodate what would appear to be the stronger odds that this is a 5 rather than a 3, although obviously I just showed you it could be wedged in there. Well, just starting from scratch, getting all of this off the chart, I kind of went through that and said, okay, well, let's see, can we get a count that works in here? Oh, shit, now I got to remember where I put it. It was over here. All right, so hang on. All right, so let's look at this. All right, let me take that off here. This is a really tricky count. Now, before I do that, whether you're a member watching here or whether you're watching on YouTube, that would be a terrific case study in terms of trying to get a count there that is consistent with Elliott rules and guidelines. Right, a good little challenge before I reveal it to you, or at least my interpretation of it. I should always say it that way. Never here to tell you that I have the right count. This is a count that would work. Ultimately, the big question becomes, do I have an impulse of some sort here, i.e. am I going higher, or do I just have a big ABC? Because this could very easily be interpreted as just a big ABC. Right? We'll make that case in a second. So I'm gonna I'm gonna hide this here. Give me a sec. Let's hide that one. So we'll be looking at this purely on the pretext that we've had 5 down to finish something, right? 1, 2. Well, shit, wouldn't matter whether if you wanted to call this a double top, you could go 1, 2. Either way, 5 down. All right, so 5 down. I'm finished. Well, shit, I should say I could be I'm finishing or starting, but I've got a significant pivot here after 5 down. Now, looking back at the history, Yeah, well, we don't need to do all that. But so coming back here, I'm going back to that's 85 swing, correct, right? We don't break the high, so we get an internal retracement. We finish with a 5. I'm not trying to make the case for the entire lifespan of the dollar index, but the point being that that hard 5 down sets up this. Now, if we come off of this with the assumption that there's a clear 5 here, and there is, right? 1, 2, 3, 4, 5 into a 1, A, B, C into a 2. Now this gets a little shaky here because you could count it two ways. You could put the 2 over here, or you could do it here. Now technically, if you really dig in here, this is the lower low. And this looks like he could dig a 5 out of there. So you could do this two ways. You could go A, you'd have to go A, B, C to get to an expanded B wave and come down for the C. Or you could go 1, 2, 1, 2. It almost doesn't matter in the context of what follows because it changes everything for it. So if you're thinking 1, 2, again, wouldn't matter, either one of these. If you're going 1, 2 here, well, you got to go 1, 2. It gets a little skinny. Now, granted, I'm on a 3-day here. Let's go to a daily here. 1, 2. It's a little skinny to get the 3 because you don't have great separation. Yeah. You can go 1, 2. You could probably go 1, 2, 3, 4. Extension in the 5th to get you your impulsive 3rd. But now, what do you do with this clusterfuck? You got just a huge headache here. Is that 4, 5 double top? Doesn't seem to work. 3 A here. It looks like you have to do it this way. It looks like you have to come down here into an A, since that's the lowest low here, up to an A, B, C for an expanded B wave, so that I can accommodate that 5 coming down. Now, so you say, okay, great, okay, that's an interesting exercise in Elliott Wave application, but how is that helping me make a trade and make money? Well, right. I mean, you could make the argument that the more you practice doing this, the more you'll reach those points of determination where, as I will often remind you, all you get with Elliott is probabilities. It's not like, oh, well, shit, that happened, so this must happen. I think that's often the problem people have with Elliott Wave. They expect it to be absolutely, almost like a system. Well, I've had 5 up, I must have this next. Or I've had 3, now I must have that. It's never what Elliott gives you. It's just it's a way to organize the chaos and then create probability zones. That's all you're ever going to get from it. Quit asking for more from it. Let's look here now. So, but then if we come back to it, so I can get some perspective here, then I can go 1, 2. Well, I got to do it this way. So I have to accommodate this somehow via an internal impulse. So I can actually do it this way. I can get the 1, 2, 3. I got to go into this expanded B wave so I can accommodate that 5 down. So I get 1, 2, 3, A, B, C. I don't overlap the 1 here. Now I go up and I get 1 tick higher, so I complete an impulse right here. Now, I know, right? It's tough to pull 5 out of there. So you'd have to do it as 1, 2, 3, 4. Up for the 5, COVID crazy hits, right? You get that volatility. But the 1 tick break here is enough to want to put that 5 right there. Now, what did we just finish? What did we finish? Is that the 3 going down for the 4? Well, we're going to find out pretty quickly, because if this overlaps here, all right, then this count starts to fall apart. Excuse me. Now, what do we have? So far, that sure looks like that's a 5 down. We're going to look at this in a smaller detail. But the premise, the bull case here for the dollar would be we'd come down here, we would not break that pivot, and now we're going up to get the 5. All right, so we'd finish that as 1, 2, 3, 4, 5. Right, that would get you your impulse, which, at least you'd have the right look. Right, and questionable as to whether or not that's in play, because the alternate here we're going to look at would be you might come down and do it more like this. So if this is going to trade as an A, we come up for a B, and then we come down. Now, how far are we going? Right, these are going to be important tells based on that pivot. All right, so that's 17 minutes of Elliott. I didn't want to get too far into that, although I think this is a good case study for it. Now, there's a couple of things we got to add to this. So first off, and members, we've been through this a couple of times here, but just to refresh your memory as we sit here looking at those 2 pivots, well, the first thing that you look at and you go, well, shit, man, I mean, something happened there. We double top up here. Well, what do you want to assume is right there? Boom. Let's get that tightened up because this one, that little pivot that took it one or two ticks beyond this pivot, it breaks just barely. Just barely. Now, is that too much of a break to say, oh, algos are out and they flipped? Well, perhaps, right? It's a bit of a judgment call. That's awfully minor break. But you'd have to give a slight edge to bulls here as a result of that, but only slight. These are both within a tick, that's a small break here, small break. If you get right up to it, they're small, right? Looks like the algos responded there. It's just a little sloppy on that break. Could be stop running, hard to know, right? It's a classic double top, right? It's retail buyers, right? I promise you, retail buyers bought that on a breakout, straight down. Okay, so 5, what do I got there? Right, so now you can see how the thinking that this could be an ABC starts to solidify. So if I bring them back now, there they are. Okay, so as an alternate here, there will be a bonus to sticking around through all of this. Okay, so if we're going ABC, right, so equally valid, A, B, C, right into a double top at a golden zone. Well, let's just assume we got that for a second. Now, let me get that off here. Let's get that one off. So I'm finishing that 5, this 1, 2, 3, A, B, C for the 4, right? So I can accommodate this 1. Now I get up here, I get a slightly higher high, I get my 5. So I've completed the C leg of that correction at a golden zone, at a double top. Now, what's come off of that? Well, let's take a look here, because one scenario here is if we're coming down, if this is the start of something, well, a couple of scenarios here, but let's just keep it as simple as possible. If I've just gone 5 and I've just finished a 3, why would we not assume anything other than a 5 coming off of here? All right, so now as to whether or not it's a 1, well, that's, time will tell, right? If we're going to do something like that. I mean, this is the '08 low, right? Here's the financial crisis. Certainly, there are people that would tell you we've built a case via what the asset bubble the Fed has blown here. Well, right? Yeah, you guys know the story, the negative story to the Fed's manipulation here, and the printing of. Well, let's just think about supply and demand, right? I mean, how many trillions of dollars were just created out of thin air? Well, right, so you say, well, shit, that's bearish as hell. Well, of course it is, but if we have uncertainty in the market, what is everybody going to do? They're going to run to the dollar, as they are prone to do at times of uncertainty. It's the dollar as the reserve currency is hard to argue with. While that may be breaking down, I don't think we're broken just yet. So as we finish the week here, heading perhaps down into the election, then my view, it's 99% certainty. The election results are contested. Uncertainty sends the dollar back up. Right, which actually could set that up just perfectly. Now, we don't know how far it goes, or how long it lasts, or how long the dispute, or when it gets to the Supreme Court. Right? Or if any of that happens, right? I mean, certainly, let me say it this way. I'd say it's 99%. So there's a 1% probability that we do not get a contested election. 1%. I'll put it this way, and I'll probably do some more on this as well. Here's the one thing that no person on the planet is ever going to hear. Now, this is my opinion, right? So don't send me your hate mail. You are never going to hear a concession speech from Trump. Congratulations to Joe Biden and the team. It was a hard-fought race. Congratulations on your win, President-elect Biden. Words no human will ever hear. Not going to happen. So thus, I go back to the 99%, right? It's just, it's not in his makeup. There's no way he concedes. No way. Not going to happen. All right, and I will be placing money on that aggressively, because I have zero doubt in my mind that that's going to happen. Right? Zero. Okay, let's. But again, I'm not trying to be political. It's just that's really not political. That's just saying, recognizing his history. Does anybody else think he's going to make a concession speech? That would be a rhetorical question. Okay, so let's just try and finish up here. Now, the last thing I wanted to do was take a look at this. If that's coming down here, see if we can put this in the context of a tighter. Oh, let's see, where do I have it? I think I have it over here. All right, so if we're coming down here a little bit tighter, let me get all these back on. What I think we have coming here, and I've got a little channel here. Okay, so let's go down to, let's try an 8 hour here. This is taking much longer than I thought, but like I said, I worked on this for a few hours this morning. Okay, so here's the COVID high. Well, okay, so back to my point about what does the world do when it's freaked out, right? There's your COVID panic buy. Right now, is the contested election something that could create that kind of a spike? Well, yeah, sure, it could. It could. Well, that remains to be seen. Okay, so here we are sitting coming into the last week of the election again. I think there's zero possibility that we have a result on election night. So if we're going to continue lower, right, off of just the Elliott count, that would suggest we're heading down here to this level here around 89, high 89 and high change, 89.75. Puts us down here. So that would assume if we're getting there by December. Well, that's making some assumptions because we don't know how long it's going to take the courts to get the decision out of the Supreme Court. So one possibility here is that this 4 is not done, and as that confusion and that uncertainty causes people to rush into the dollar, this 4 could be extended before we come down. So the 4 certainly has plenty of headroom here to go up and get to that. So if we just now apply some basic Elliott on the assumption that I've got a good impulse here, which I think we can make that case, I've got an impulsive 3 in, I got my first ABC, but if the uncertainty of the election and the disputed result send the market up here, right, which is we're going from 92 to 96, again, another 4-point spread, a 4-point move. Well, it could be right here where we'd have a little bit of structure here we could play off. Come here. Oh, let's use that. All right, so perhaps we're coming into something like that. So we get a bigger ABC into the 4. Right, so this remains our 3. So 1, 2, 3, 4, extension in the 5th. So perhaps a bigger 4. We had this little choppy ABC into this double top for the 2 here. Oh shit, I think that was technical as well. All right, if I pull from here, all right, it's just a couple of a front run on the 50. All right, got that pivot. So if we were going to come up here, perhaps another front run on the 50, and we're heading back down to these lower targets here. So you can see how that could play out, right? We come down here, catch this here, ultimately get that algo target. All right, now let's with all of that said, it was kind of a long-winded way of getting here. But these will be the things to watch. Okay, so let me clean this up. And let me get this off here. So having made that base case here in terms of the uncertainty, right? So, but let's say this. Let's consider the alternate. So let's say I'm completely wrong, and we have an election result on Tuesday night, right? If we have that result, well, depending on who wins, right? In terms of what would you anticipate, because this is an unknown. What would you anticipate? Now, certainly we can look at the polls. But what would you anticipate is going to happen? Well, there's a few factors in the background you could add into this. I'm of the opinion that stimulus is inevitable. Doesn't matter whether Trump or Biden wins. Eventually, stimulus is going to come. So that's another, I don't know, $2 trillion printed out of thin air. Is that going to be bullish for the dollar? Perhaps, right? Mixed opinion on that. Perhaps it could be bullish just simply because the market will rally so much, right? The market's going to explode. So as soon as stimulus hits, market's going through the roof, right? So that potentially, so you'd have to look at that and say, well, what does the market historically do? Right? Can we make a case based on precedent? How about we say it that way? We'll use the legal jargon. Well, let's just take a look here now. So let me go back out to a daily here. I think I've got these here. Yeah, I do. Okay, so some of this might get here. That's why I had these off here. Let's reset here. Okay, so there's a daily. Okay, so let's put this in context. So let's look at the dollar with the idea that something has started here. We know we got a double top up here at a golden zone. We can make a case for completing either a 3 or an ABC up here, and now looks like, at least at this point, like we've got a good start on an impulse heading down. Well, let's compare them one at a time. So first, let's look at the market. Okay, so let me push this off to the side. So here's the stock market. I'll kind of open this up a little bit. Best I can do it. Relative to the dollar. So dollar in the background, here's the S&P. So here's the COVID sell-off. Right? So we can just, right, and I'm sure you've all looked at this. So market crashes on COVID, the dollar spikes. Right now, is the election being contested enough to cause that? Well, it may or may not give it that percentage of a kick, but it's likely to do something. Right, or in terms of kicking it higher, right? And just in terms of the confusion, when in doubt, you sit out, you buy the dollar, and you wait for things to settle down. We can look here from this is end of December of 16 down into the 18 lows. Now, as we rally here, as the dollar starts to rally, everybody's in sync until we get that sell-off here. Market goes down, dollar goes up. Now, as the dollar has drifted down lower, market continues to charge up. Right, where we've just put in that new all-time high, and now indeed we have a lower high here, but nothing says that couldn't just be a little retrace before we kick to a new high again. Right, nothing says we're done here, but it's certainly, you could make a case here that if this is going to continue to go down. So let's look here. If the market's going to go, if the dollar is going to go down, right, and stimulus is ultimately coming, what is that going to do to the dollar? Or pardon me, to the market. So if the dollar is going to go down on stimulus and the market's going to rage higher on stimulus. Well, last time the market was on a long trend like this, the dollar was, heading lower. Here, you can look at it right here. You can kind of see these here they're kind of going up together. Now the dollar going down as the market continues to soldier on. Right? It's worth looking at how those relationships play. Let's compare it to gold. We take the S&P off. Let's put gold on. All right, so let's look at that. Let me get back out here where we can, maybe I'll go to a 3-day, get a better look at it. All right, so as we look here, so as the dollar rallies, gold going sideways. Now as gold has rallied along, well, let's open it up here. So as the dollar has rallied into this pivot, gold has kind of gone along with it. Here's the COVID spike, but now as the dollar is going down, gold continues to soldier on, right, going higher. All right, let's reset these. It's better to look at it on a daily. We can see it a little bit better. All right, so here's the dollar selling off, gold continuing higher. Dollar selling off, gold essentially going flatline. Right, in terms of the relationship between the two. All right, as gold continues to go on, then let's look at it relative to Bitcoin. Oh, let's here. Now here's Bitcoin. Now Bitcoin will be, all right, obviously this will be interesting to you guys here, and we can really see this quite clearly here. So if we look here at our pivot high in the dollar, here's Bitcoin at 2017 before the ramp. Right, so as the dollar is going down, right, Bitcoin is going through the roof. Right, so now as we look here, right, getting these in sync as the dollar's going down. Well, here, look at here. We can do it this way. Look at this relationship right here. Right, as the well, we're not it's not day perfect here. I am on a 3-day. Pardon me, I'm on a daily. So as we get our high here in the dollar, we get within a day or two of the low of Bitcoin. So now as Bitcoin has rallied, the dollar is going down. So if this is going to go down and finish down here, right, what is that going to do for Bitcoin? This is going to be the big question mark for crypto traders, certainly. If we have a contested election, we have that confusion, and the market, the stock market, the S&P, and they're all selling off, what does Bitcoin do? What does the dollar do relative? So these are relationships, and it's very easy. I'm assuming you guys know how to do that. You just hit compare, right? You put on any asset that you want. I'd be watching these relationships for tells and clues as to where we might be headed. Now let's finish up with the last look here at the dollar and how we have this target down here. So let me do it this way here, and then I'll wrap up. Shit, I didn't mean to go this long. Let's take you off. Let's take you off. And let's see if we can get a reasonable target on the dollar. So there's a daily. Let me do it on a 12-hour here. I think we'll get a little bit better look at it. Okay, so from the pivot here, on the assumption that per my view, we completed a C wave here. And this is the start of an A wave or a one wave, or it could be either one, going down. So I've got a very good start on an impulse here. So let's just check it. So as we look at it from the pivot high, if that's the 1 and that's my 2 right here, well, where's my 3? All right, you guys seen me do this 5,000 times. Where's the high probability for the wave 3? Right, 1618, 175 window. Excuse me, guys. So what do we get? We just far enough to stick a toe into it. Reaction. Right. So I've got a great contender here for my wave 3 relative to the proposed 1-2. Right. Beautiful. How about the internal? Right. If I take the length of the 1 projected from the 2. Right. I'm at the 227 for the internal, projecting from the length of the 1 to the 4. That's a big kick in the 5th to go a few ticks beyond the 216. Big extension in the 5th. All right, so so we've got a 1-2, good candidate for a 3. If that's going to be my 4, if that's going to be the 4, big if that's going to be my 4. Grab this here down to this. Well, we're not quite making it to the 23, but we're in the high probability zone. High probability zone for a 4 between the 23 and the 38. So it's not unreasonable to put that right there. All right, now what else? All right. I mean, some of this stuff is so obvious, right? All right, what else do we run into there? Prior support becomes the resistance. So we look down here. So now I'm just putting that together. Lo and behold, look where the algo target is. All right. Well, let's look at the potential wave 5 target from the length of the 1 projected from the currently the proposed wave 4 target. I get right on that. So you can see how I was coming up with this as a target for the dollar. All right, so if we're coming down here, well, from where we're sitting right now at 92.7 with a target down here at 89.5, three full points on the dollar for a potential contender here. And we could do this. We could do this here going into the end of November while the election results are being contested. All right, so we're coming down here to get that. Now we get a result depending on, I don't know that it matters who wins, right? What's next, right? Stimulus, right? Stimulus. Right? How many dollars are they going to print out of thin air? What's that going to do to Bitcoin, right? If this comes down and we finish the 5, now keep in mind that the 4 could go up here. We could still get this as the 4. We can get an ABC for the 4. Target didn't move. Still have the same target. Oh, the election result is contested. They're buying the dollar. Up we go, right to the 5. Right, and we drew that before. We got a little pivot here, a little structure to work with. Shit, you can pull a couple of these. Yeah, shit, there's plenty of prior support that's in here that we might catch here for the 4. It's contested. Oh, we have a decision. All right, down for the 5. Here comes $2 trillion of US dollars created out of thin air. All right, so there you go. So a few things to think about. I'm not really teeing up a trade here, just giving you some ideas about how you might anticipate what's to come and what to watch for. And it's very easy to do. Just do those overlays, right? So most of you guys are going to be following Bitcoin. Get Bitcoin back on there. What would you anticipate, right? If the dollar's going down, Bitcoin here, as we're pushing the highs here now, I'd be watching these relationships in terms of where they're headed, right? Because this certainly could be down here sooner, right? Because you've got a perfectly valid 4 as we sit here at the moment. Dollar down, Bitcoin keeps going on. Dollar starts to rally. Now, who's rallying harder? Right. This is the big unknown for crypto traders, or I should say, with Bitcoin traders. If we have confusion and panic selling, panic selling in the indexes because of that confusion, it may or may not be panic selling, but we have volatility. Volatility is just code for the market selling off, right? They just don't like to spook the public. Oh, so the market's experienced a little volatility. Code, the market is down today. So if this is going to go down and the market's going to go down, is Bitcoin finally going to disconnect? Does it finally disconnect and become its own safe haven asset, right? Well, you guys know what I think. All right, there's plenty to chew on there, guys. Again, I don't think it's the right time to be adding to a new position here. Right, that S&P option trade I gave you guys, I think is the best way to play this volatility. After that, I'd want to see some of these relationships start to materialize in terms of which direction they're going, because we're kind of at an in-between spot here. And once we get some more clarity, right? For example, we're going to take out this low. Well, then I lean into the 5 here much more strongly. It's going to be interesting to watch. Okay, guys, there you go. Have a good afternoon.